Can you keep up with the pace of market regulatory reform? MarketsReformWiki.com, the place to keep up.
Tell us about Shinnecock.
I started the Shinnecock Partners 23 years ago when I left Wall Street. And I knew Wall Street never met a fee they didn't like, and they probably guilty as charged, they're casual about risk. So I said, that won't work for me. So the shoemaker had to make his own shoes. And so I created two funds of funds. One is a fund of funds in multi-strategy stuff. The other is a 18-year-old futures fund of funds.
What are the keys that have led to your longevity?
I've been picking managers in the CTA space for even prior to starting Shinnecock when I was on Wall Street. I think a duty of care for investors has really done us in good stead. Being careful, probably conservative, and skipping highly levered CTA strategies.
How has the CTA space changed in the last few years?
The CTA space was regarded as the Wild West with no controls. The flim-flam men of Wall Street were typically regarded in the CTA space, and I think it's come of age. Now it's far more professional, carefully done by and large. That's the substantive change over time. It's become more institutionalized, and the institutional type of controls, which are good.
What do you mean by more professional?
Quality of the people, which is a fundamental building block, and I think any investment strategy is far higher, number one. Number two, you've got a learning curve for all of the service providers in the managed futures space. What do I mean by that? Accounting firms are knowledgeable, more than they ever been. Of course, they're much tougher. So like the big four accounting firms, that's a good sign for a manager that uses one because they're careful. A second thing would be, or maybe a third thing would be, the advent of administrators. Because if you're an investor in any investment, particularly the CTA space, you want to be sure you're protected against somebody running off with your money. So cash controls, which an administrator can address directly. That's one thing. And two, sadly, in the overall investment community, you don't want anybody to be able to cook the books. So having an accounting firm, a quality one, is good, but that's only once a year. So you want an administrator that is doing all the investor reporting, because that's usually monthly, if not more frequently.
2008 put CTAs on the map. Where are we with institutions investing in CTAs today?
What triggered the change was really the desire for additional diversification by these enormous institutional investors. And as you mentioned, the last couple of years have been hard years in the future space. However, you've got this burgeoning institutional demand, but now they're saying a little bit wait and see. Was that a fluke, a flash in the pan, or is it more durable? And I think the smarter ones have decided it's durable. Futures are an uncorrelated, generally, asset to most other forms of investing. And so if you're building a diversified portfolio, one. Two, if you're a believer in modern portfolio theory, which relates to how the portfolio is stitched together, futures, even if at the moment, last 12 to 14 months, hasn't been doing that well, it's still a terrific diversifier because it acts as a giant shock absorber to a typical equity bond portfolio during periods of extreme economic stress like 2008.
What do you think about the growing trend of managed futures mutual funds?
it's fascinating, and maybe it makes me just too conservative, that the investor criteria for a CTA mutual fund is lower than a private placement. And yet the disclosure is orders of magnitude more for a privately offered CTA fund than it is for a mutual fund. To me, being the conservative lad that I am, a problem. And until you have the dueling regulators sorting it out, I think there's some risks that investors are not totally aware of.
Doesn't this bridge a gap to help investors get into the future space?
I think you want to give the investor on Main Street total and complete disclosure, which I don't quite see today, number one. Number two, you have an interesting phenomenon that a lot of the new mutual funds, which is true in any new category, have almost no visible track record. And if, as an investor, particularly an institutional investor, I would want to know what the track record is before I invested.